Hey, welcome back. Thanks for tuning in. As always, it's really great to see you. Boy, we've had a busy day of meetings so far, haven't we?
Oh, yes. From 8:30 this morning, the inflation figures came out. And then at 2:30, the Federal Reserve announced the latest federal funds rate. So, yes, it's been crazy. And these are important indicators that we look at in the housing market. So, yeah, we were all on top of that today.
Well, we promised you last week that we would cover these in full. So let's go ahead and get started with the CPI report. That, of course, is the Consumer Price Index, and that was released this morning at 8:30. There's good news there. It's not significant news, but there was good news. We're definitely starting to see a trend downward. Of course, the CPI measures the inflation, which is occurring currently month to month as well as year over year. The year over year number that was released this morning was 3.3. You may remember that in March, that number was 3.5. Last month, the April numbers were 3.4. The June report, of course, reflects the May's number, and May was 3.3.
All a good sign.
Exactly. That's the year over year number that we've been monitoring and watching, month after month after month. Very good news. Again, it feels like we're on that downward trend, we hope.
Yes. And the Federal Reserve left the federal funds rate exactly where it has been for almost a year now.
Yeah.
Almost a year, not fully there yet, but they're going to keep it between 5.25 and 5.5, which means for mortgage interest rates, it's going to stay around what we've been seeing. I've seen in the past 2 weeks, anything from 6.8 up to 7.4, 7.5 even. So I think what that means is expect those mortgage interest rates to stay the same. What I found interesting in what he said was in their predictions, and they do this, it can change, but they really don't expect inflation numbers to come down to where they want it to be until 2026. And even though they had some good news, I think in my head, I'm thinking, you know what, these rates, we're going to see these rates for a while.
And just a reminder, that inflation number that they're targeting is 2%. So again, as Denise points out, that's a long way from the 3.3 that we've seen today. Interestingly enough, as you and I were talking earlier this morning, as you listen to kind of the world, the international news over the last couple of days, there are a couple countries in Europe that have actually lowered their funds rate down, kind of anticipation that certainly their economies are improving, but also that the U.S. economy is improving. So we found that interesting. I mean, we and Jerome Powell, the chair, of course, said today, they're still maintaining a conservative watch and see. While things are promising, they still anticipate that there could be a change in the other direction, and they don't want to stall the economy by keeping the rates up too long, but they don't want to jump into a scenario in which the rates come down and then they have to raise them back up again. So we're trying to get away from that.
Yeah, and a reporter, one of the reporters asked that question because he said he does
Smart guy.
Yeah, he does expect the federal funds rate to come down to 5.1 by the end of this year. So he was like, well, why are you bringing it down if you don't see any change in the economy? And he said basically they know they're tightening the economy by keeping this rate so high. What they don't want is for the economy to start going down. And so they feel like they're almost have to loosen up a little bit to keep from that happening. So I thought that was interesting.
Yeah, with Chairman Powell's prediction of 5.1 by the end of the year, I think we both looked at that and said, well, that's good news. That's, again, an indication of what they're kind of anticipating. As we've talked about before, a lot of the programs that they put in place are obviously working. Let's keep our fingers crossed. We've got 2 more meetings that are coming up here. On July 11th, this next CPI report is coming out. And then the following, kind of the tail end of that month, July 31st, is the next Federal Reserve announcement. So we'll continue to monitor this. We'll give you updates as promised. And we kind of had a sneak peek just as we left the office with regard to the market statistics. And we'll talk to you about those in the next video next week. But there's some really strong indications, but there's still some kind of interesting changes that may be occurring as well. So stay tuned and we'll update you with that next week, of course.
Yes.
As always, we really appreciate you tuning in. We hope that the information that we're sharing with you is valuable, and we'll look forward to seeing you real soon.
Bye.
Bye-bye.